Hey traders, Nick here doing homework on Sunday night. All right, so let's start with what happened. It was a bad end of the week to a bad week, but they've been rare. So if we're looking at the daily charts, you would see curl down in the S&P upper left, QQQ held up the best because of fake news on Apple, and then Dow curled up the worst, which we already knew if you watched the video from last Sunday. And the IWM went back to below 200. So there's not a lot of good news except for one thing. The mega caps held up the markets. How much more can the market maker do with that? Let me zoom out to a weekly chart to remind everybody that this is not a bearish market. Yes, 2 red weeks. It hasn't happened in 22 weeks. This is new. But we are less than 3% away from an all-time high. We haven't even started falling if indeed this is a top. All the credit call spreads that I shared recently on the indices have played out. So the mission is the same. We are looking for a top, but we are not ready to announce it. We do have more cracks showing up. So we continue trading the same way, selling credit call spreads on big days or buying some debit put spreads on some extended tickers. So this is the S&P. It took it on the chin harder than the NASDAQ. Why? If you remember, the objective last week was to hold the lower X and try to get out of the upper X. The S&P lost the lower X. So the objective here is to recover it. And this red box is going to be difficult, full of resistance. And this yellow box may be a magnet, but they have to cut through the red box first. Not going to be easy. Especially, you need to do it before losing Friday's low, which is right there. And you don't want to lose 509 before you get back up to 515. Now, on the NASDAQ, it's very easy. Just continue doing what you're doing because they held up well. Here are the X's on the NASDAQ. So their job is not to lose that X. The IWM, I should say, recovered to 05, which has been a pivotal zone. The Dow, on the other hand, illustrated by the DIA, this is the update to the chart from last week. We have a target that is much lower. They did half of target 1, so the objective with the DIA is to bounce at least $10 and hold next week. Now that we know all the numbers that we're looking for, let's see if there are any scheduled catalysts that are emotional. I see we have some retail sales, and then we have Fed heads still speaking. We have auctions, bond auctions, which have been somewhat sensitive to the market, nothing major. Building permits, mortgage information, so we have a lot, and the Fed Beige Book, Fed Mester speaks. So nothing huge yet, but a whole bunch of little things. More Fed heads speaking. Oh my goodness, this person speaks twice in one day. Now, there are some geopolitical news out there, but I don't think it's anything new. The futures, as I'm speaking, are greenish. We didn't open gap down, so there's no stunned faces on Wall Street yet.